Hey, it's the Reg CF Chronicles, where we shout out companies doing amazing and innovative work in sustainability, climate, or ag space. Each company uses Regulation Crowdfunding to raise money from the public, turning their supporters into investors. This isn't Kickstarter, friends. This is next level. If you're interested in Reg CF, whether as an investor or as an entrepreneur like myself, you're in the right place. Let's dig in. Hello, and welcome to the first episode of the Reg CF Chronicles. Before we get into our first example, I want to first go over what regulation crowdfunding is. When I say Reg CF, that stands for Regulation Crowdfunding. And because this is our first episode, we're going to take a step back and first make sure that everyone's kind of on the same page when it comes to terms, what Reg CF is, what it's not, and then we'll jump into a few examples so you can see what it looks like and see how it might relate to you, whether you're an investor or an entrepreneur. So first up, what is it? So regulation crowdfunding, it's also known as equity crowdfunding. Equity crowdfunding. You may hear people say that as well. But basically what it does is it allows companies to raise money from the public, from anyone online. So that includes people in other countries. Not all countries, because we do have some rules and regulations around that, but it does allow you to raise money from a huge, wide population. So if you're an entrepreneur looking to get your startup off the ground, instead of having to worry about a small network of people that you might know, family and friends that you may have already kind of gone to, next level is trying to go to a larger network. And what better, size network to go to than a global community, than the global public. So that's what's so great. That's one of the things that's great about regulation crowdfunding is it allows for companies to go out to a wide, vast amount of people to look for investment. Now, what's the next thing? It also creates an opportunity for fans and supporters of those companies to actually become investors. So if there's a company that I'm digging, that I like online, or a company that I support, I could potentially become an investor in that company. And when that company does well as a customer, I also get some ownership. I get some value from their growth, from their success as well, and not just from a customer perspective. But if you're an entrepreneur looking to do regulation crowdfunding, it's really great because your customers become your supporters. I mean, they're going to be the ones that are going to use the product. They're going to give you some great, valuable feedback. And they're going to really want to make sure that you succeed because they love what you're doing and they're a part of your mission and a part of your team, really. And the other great thing about regulation crowdfunding that I put there is that it's regardless of wealth status. Regardless of wealth status. So why do I throw that in there? Why is that important? Regulation crowdfunding, Reg CF, really has only been around since 2016. In 2016, so it was part of the Jobs Act in 2012. So in 2012, during the Obama administration, they brought in the Jobs Act, and part of that was this regulation crowdfunding thing. And what that did is it said, if a company wants to raise money previously, before the Jobs Act, if a company wanted to raise money, they needed to go out and find what were called accredited investors. Accredited investors. What are accredited investors? Accredited investors are people that are high net worth individuals, people that are worth more than $1 million or more, or they're making salaries that are more than $250,000 a year, as an individual. And that definition has changed over time, so don't quote me on that. But accredited investors basically means high net worth, and the majority of the greater population does not fall into that category. They just don't, which means that the majority of the population can't participate in investing in companies that they might, believe in or want to support or might think are great opportunities. So what the Jobs Act did is it said, all right, scrap the accredited investors with some limitations. So now anybody can be an investor. There are some limitations on how much you can invest of your own money, but anyone can now be an investor. So as an entrepreneur, I can now go out and say to anybody, regardless of their wealth status, how much net worth they are, would you like to participate in an offering and be a partner, be an investor in my company? And that individual can look at this opportunity for themselves and decide whether it's a great opportunity and get in, regardless of the fact of whether or not they were worth $1 million or more. but it is an investment, so it does include risk. So with that being said, the next thing is, how does it work? Because it includes risk, it needs to be regulated, and that's what regulated means in this regulation crowdfunding. By it's regulated by the SEC, the U.S. Securities and Exchange Commission. So what you have to do as a company, if I want to raise money, I have to register my business. I have to file a Form C with the SEC. That's just one thing you have to do. And then, in order to put my offering out there, as a company, in order to say to the public, hey, I'm accepting investors, you have to do it on an online broker platform. You have to go to another company, basically, an online company, and say, can I put my offering on your website? And that company will handle the regulation for you. They will kind of be the go-between for the SEC for you. So there are lots of online broker platforms like StartEngine is one of the ones that my company uses. WeFunder, Seed Invest. There are a lot of different types of online broker platforms. Each of those companies, they have to be registered with the SEC, and the companies that are actually putting the offerings out there, the companies that are looking to raise that money, they have to be registered with the SEC too. So there's some stipulations and some rules to this. And as we kind of, over the next few episodes, I'll share a little bit more about that. I don't want to get too dragged down into all the details right now, but I really wanted people to understand that, one, it's a great way for companies to raise investment capital. Two, it allows for the greater community to participate in investment. And three, it's regulated by the SEC. So you can't just jump out there and go, hey, I have an offering, please invest in my company. There are some rules to that, but it can be done. So let's go on to the next part of this. What regulation crowdfunding is not. What Reg CF is not. Regulation crowdfunding is not GoFundMe. It's not a gift or donation. That is not regulation crowdfunding. When you go to a place like Kickstarter and you see that there's a product or something that's cool that you want to purchase and you give money for a product, a t-shirt, whatever, that is not regulation crowdfunding. That's traditional crowdfunding. When you go on to something like Patreon, perhaps, and you sign up for a subscription, or you support a really great artist or a community or a network or a nonprofit, and you're giving them money to support their cause, that is not regulation crowdfunding. That is a service or subscription-based crowdfunding. So there's lots of different types of crowdfunding out there. So when people say crowdfunding, you really need to be more specific. Are you talking about donation-based product or service? Or are you talking about regulation, or what's also known as equity crowdfunding? So something to take away from this. When people say regulation crowdfunding or equity crowdfunding, they mean something entirely different from what you're seeing on the screen right now. Now, who's it for? Like, who should use regulation crowdfunding? Who's this designed for? What kind of companies is it best suited for? It's best suited for those private early stage companies with a wide variety of industry types. Like, all different types of companies can use regulation crowdfunding, different types of business models, etc. And each type of online broker, like StartEngine, like I mentioned, WeFunder, Seed Invest, there's lots of different types. They all have their own kind of niche, their own specialty, so that they cater to a type of community, maybe one way versus the other. So if you're interested in either investing, and you may find that there's a particular type of online broker platform that speaks to the type of companies that you're interested in versus another. And likewise, if you're a company looking to use regulation crowdfunding to raise some investment capital, do your research. Do some real good research, because there's a wide variety of them out there. They all have their pros, they all have their cons, and they all have their different pricing as well in regards to the fees. But not to get too bogged down in all that right now, let's move forward. How we're going to learn more about this with the Regulation Chronicles, how we're going to do this is we're really just going to go through examples. And I'm going to show you a bunch of different examples. Every episode we'll go through another one, and we'll just kind of learn and explore that way. So let's get started. And please don't forget to subscribe, like, and follow us for more.